are some of these metal names like Tata Steel, which is down about 3.5%. FMCG names like HUL continue to sulk, and some of the IT names like TCS are down about 1.2% or so. On the upside, KN is up almost about 7%. It has been the big gainer through the day. But now let's focus on Bajaj Auto, the stock which has tanked about 5% post its numbers. S. Ravikumar, the President of Business Development at Bajaj Auto, joins us to talk about that. Mr. Ravikumar, good afternoon, and thank you for joining us on the show. You know, the top line growth of 6.8% has been below street expectations, perhaps because of the way realizations have fallen sequentially, both in the domestic and in the export business. Just take us through whether you expect any more pressure on realizations in the quarters to come.
See, I think the realizations, the correct comparison would be, let us say, from a Q1 of last year to this Q1. If you see the realizations in Q1 of the last year, it was around 53,000 rupees. It has gone to about 55,500 odd rupees in the current quarter. The comparison with sequential comparison is a bit concocted, basically because of a substantial drop in volumes in, for example, in Q4. Exports, as you know, tanked for various reasons, and that, along with the fact that the low-priced boxers in exports, for example, typically we do about 210,000 units in a quarter. They dropped to about 100,000 units in Q4. That, added with the base effect, had sort of thrown up a slightly higher than normal average realization per unit, and I think that is not the correct comparison to go by. As far as this quarter itself is concerned,
sir, but you know, just to come in on that, don't you think now the realizations will have to be adjusted to a new normal on the downside, because you are selling more of your low margin products like the CT100 and the Platina, which is of course a great thing because the traction is picking up there, but the blended realizations will move lower, right? So do you expect this 55,000 rupees per unit to continue for the quarters to come?
I would certainly say that, you know, this quarter has been by and large a correct representation of the proportions that will happen, and in fact the new pulsars which we have launched will actually increase the super segment share, and there will be a ticker there, and I think the foreign exchange rates are going quite okay. Exports are looking quite robust. Three-wheelers are doing quite robust. The spare parts are going quite robust. I think the proportion today, for example, in the current quarter, 250,000 units is what we have sold of the M1 segment, which is CT100, about 175,000 units, and 75,000 units of Platina. So it's a very representative basket that you're seeing in Q1. Going forwards, I think things should, if at all, improve from here in terms of average realization per unit.
Okay, Mr. Ravikumar, good afternoon. But in your high margin categories, do you think you're losing maybe too much of a market share to, say, something like a Royal Enfield? Because maybe because of shift in you know, consumer demand or patterns or aspirational changes, and you know, there not being a similar product in that category for Bajaj Auto maybe.
Royal Enfield is certainly a niche, and that is something which we will see how to answer. In fact, it was announced in the AGM, so I'm just sharing it also with you. Going forwards in Q3, you will see some action in the Avenger front. So things are happening there. But that said, in the sports segment, taken together with the launch of Pulsar AS 200, 150 and Pulsar RS 200, we have been comfortably holding the position of about 43% plus market share. And in fact, I think in Q2, where the college season and all that kicks in, the problem there has been the non-expansion of that particular category in terms of numbers, and we think that will unfold in the quarters to come.
Fair enough. Just coming back to the realizations, you said that they would improve going ahead. On export realizations, we've seen a fall of around 6% sequentially. As you mentioned, it's because of higher volumes of the low-margin boxer. Going ahead, what kind of sustainable export realizations do you expect to see?
You see, I think the going forwards in terms of total exports, we are well on track for this 2 million annual target that we talked about. I think the July numbers are going to be certainly 160,000 plus, and the mix is quite well balanced. And as I shared with you last time, Pulsar 200 NS is doing great numbers in most of the countries. Three-wheelers are doing really great numbers in all over the place. Nigeria has nicely rebounded. I think the export story is going to be on all fronts, including the average realization, going to be damn good.
Okay. So, you know, I guess the reason why the stock is under a bit of pressure today is because by your own admission, you had stated the last time we spoke that the June quarter will be the best quarter for Bajaj Auto. But that has not really played out. So there is a little bit of disappointment in the analyst and the investor community with respect to the expectations that the management themselves have set out. What kind of realistic expectations can we work with going ahead in terms of both the overall volumes and the margins?
I would slightly disagree with you there, basically because 21.1% EBITDA is a fantastic number, and there has been a sequential uptick in the percentage by more than about 120 bits there. So that has been damn good. And there is a lot of concern about CT being the low margin product, whether the EBITDA we will be able to maintain or it will be pulled down, etc. That has been belied. There's been a sort of export total numbers because of Nigeria, because of Egypt, etc. There was some sort of a skepticism there. That has been completely belied. In fact, in operations, I think this is one of the best in maintaining the operating margins. You know, everybody calculated. I saw the consensus estimates and things like that. Of course, in the average realization, I think the analysts and people got it a bit wrong. But whatever was the consensus estimate for operating margin was 20.3, and we have banged on there, delivered on that 20.3. And the second thing which I would like to mention here is the operating thing has, I mean, my basket has been doing quite well. Coming to the non-operating area, even in the treasury, we have delivered grand numbers there, and we have this 10,000 crores. It is not a one-off, and things are going to continue to play out on a recurring basis based on the returns that is going to come from treasury. So both on operations and on treasury, we have done a great job as far as Q1 is concerned, and things will certainly unfold better in the quarters to come, because I can share with you in terms of domestic market share, though we have on a quarter basis, we have improved by about 300 bits. In retail market share, exit in June was upwards of 19%, 19.2% to be specific. So we have every reason to believe that domestic market shares will continue to keep increasing. And as I told you, exports doing great, three-wheelers doing great, spares doing great, KTM doing great, Pulsars doing great, new Avengers coming. Okay. So things are going to be damn good. Okay.
Mr. Ravikumar, last time we spoke to Rajiv Bajaj on the Nigeria issue, he did say that there's been a bit of a hit, but he was not in a position to quantify the hit because of what happened with currency issues. If you could tell us the situation in Nigeria and what kind of numbers are you reporting from Nigeria now?
Nigeria has very beautifully rebounded, and in fact I'm sitting on orders of about 47,000 units for the month of July itself. The hit was mainly in Q4. In Q1 itself it completely rebounded to almost near normal, and now it is better than normal in Nigeria.
Okay. Can you throw some more light on the three-wheeler market? This time your volumes have gone up about 25% on a quarter-on-quarter basis if I compare between last quarter and now. Is there any major permit market that will open up on the three-wheeler sales front? And what is the full-year volume guidance? Both, if you can break up the domestic and exports for us.
You see, I think the three-wheelers, if you look at the domestic, in numbers, they are a bit low, but in terms of market share, we have gone from 50% to about 55, 56%. The domestic market share has really jumped by that 500 bits. So all the upgrades of three-wheelers which have been played out in the market through the last year are paying dividends right now. Then as far as exports is concerned, Egypt, Sri Lanka, Bangladesh, everything is on a full track mode now, and there again we have done very well. That's why you see a combined figure of about a 21% growth quarter on quarter for this particular three-wheeler segment. I think the total guidance in terms of the numbers, we should be doing somewhere around 600,000 units in a year.
Okay, 600,000 units for three-wheelers. Just coming back to the margin picture, just to reiterate, you do hope to maintain and you will maintain this 20 to 21% margin levels despite your, a higher chunk of your sales from here on coming in from low margin products. Is that right?
The proof of the pudding is in the Q1 results. The operating margins are 20.3. And I would tell you that this would be a representative quarter in terms of the mix, in terms of low margin versus medium margin, high margin products. And the currency is doing quite in exports, and the forex rates are quite okay. And raw material rates are subdued. And certainly I think we should be in a position of our traditional 20% plus is very much there for the coming quarters.
Okay. No, I fail to understand how that is possible, because you yourself are saying that the CT100 and Platina run rate will improve from 80,000 currently to about 1 lakh per unit per month very soon. Won't that bring down the blended margin rate?
It is, let us say, to be specific, when you're talking about average realizations per unit, I can share with you that between the last quarter and this quarter, the Pulsar average realizations have actually gone up. And the second thing, more important to note, is in the segment which you alluded to in terms of the City 100 and Platina, we have more than doubled the volumes. We have more than from a 24% market share to almost about a 39-40% market share is what we have grown. Certainly at these levels of operations, a huge amount of operating leverage kicks in. So I think, again, if I'm going to go from a 40 to 80 in a future quarter, then these questions are very relevant. But I have already displayed to you in a quarter where we have done 250,000 units of these quote-unquote low-margin products of CD 100 and Platina. Platina is certainly a better margin product, of course. I've shown to you that we are delivering 20.3%.
Okay, just one final question, because we're running out of time, Mr. Ravikumar. Two numbers for us. This time your market share has improved from 15 to 18%. How much more of an improvement can we expect, say, by the end of this calendar year? And the second, by the end of FY16, what kind of volume targets would you lay out? You told us about exports, but what would the overall volume target be?
See, I think we have talked about exports is about 2 million, and the full year guidance will largely depend on how the Discover 125 plays out and how the product which we are going to launch in the medium in the middle segment, that M2 M3 markets, that is going to play out. But so I'll rather keep that for a later point in time. But having said that, I told you in June our exit market share domestic was 19.2%, I think, in terms of retail, and that is very heartening for us. Going forward, certainly I have been holding on to this 23 type of a market share exit by March. Let us stick to that line.
All right, Mr. Ravikumar, thanks a lot for your